Welcome to Market Snapshot from the InCred Equities desk. In this podcast, our expert from the equities research team helps you navigate the stock markets with a quick roundup on the previous day's closing, along with relevant insights. Whether you are an experienced investor or starting out, this podcast will equip you to take informed decisions.
Good morning, everyone. Nifty had a flattish session yesterday, and this is good news for the bulls, which have been decimated so far. We have seen them either being forced to liquidate the positions or forced to cover their short puts in case they are part of the FNO space. Nifty has formed a doji. It's not a very clean doji as such, but what doji basically means is it's an indecisive candle where neither the bulls nor the bears were in control. The battle between the two ended in stalemate, and that is a sign that there is some exhaustion. So if it is formed after a strong upside, that is a sign of exhaustion of an uptrend, and if it's formed after a correction, that is a sign of exhaustion of a downtrend or downward pressure. And that is a good news for the overall market participants. If you look at the highs and lows of the doji, they are basically placed at lowest place at 24,341. Highest is placed at 24,481. So this particular zone is going to be critical. If the high is crossed, or let us say if Nifty crosses 24,481, we may see more upsides towards 24,700. On the other hand, if 24,341 is breached, we may slip towards the level of 24,200. Now, one may argue that what kind of data point this will be. So this is ideally how a doji is played. As I told you earlier, doji is neither a weak candle nor a strong candle. It's an indecisive, it's a confused candle. So the data point is that way only, that you either buy above or below. Risk traders, if we witness that Nifty is trading around 24,430, 440 spot, risk traders can initiate long positions for the simple reason that on hourly charts we have seen a positive divergence in RSI, which basically means that the prices have made a new low, but RSI does not make a new low. Ideally, if prices make a new low, RSI, which is a derivative of price, should also make a new low. Instances when it does not, that gives an idea that maybe the fall might be arresting. It's not sign of a bottom out process, it's a sign of exhaustion of the downward pressure. However, the upside are right now clipped at 24,700. There are two reasons for that. One, Nifty had witnessed a breakdown, a solid breakdown from head and shoulder pattern on daily charts, something which we spoke earlier. This is a reversal pattern in nature. The neckline or the breakdown point of this particular pattern is 24,700. If it goes towards these levels, it will be retesting that. If it gives a close, then we may look for another 200-300 point minimum upside. If not, let us try to control our emotions and horses and our positions and not play for a very strong upside. Play as the days progress. Also, second point, Nifty has entered downtrend on daily charts with formation of lower tops, lower bottom. So on both the perspective, one has to be a little bit cautious at even at these levels and play for a bounce back, not for a bottom. Bank Nifty was seen outperforming yesterday. It closed 300 points up. There was a recession at higher levels, and it is also forming what we know as a bearish flag pattern, trying to activate those, but a close below 51,000 would result in a swift fall towards 50,000 and below. Again, something which we have been discussing for a while now. US markets yesterday closed on a flattish note. FIs were net sellers of 5,000 crores, domestic bought around 3,600 crores. So the selling by FIs continues unabated, and that is putting pressure at high levels. Market breadth yesterday was not very enticing as such. GIFT Nifty is pointing towards 15-20 points cut as we speak. So in all likelihood, we'll open on a flattish to mild negative note. I don't expect a very weak opening at this point in time. As I said, yesterday's low is going to be critical. Nifty has closed at 24,400. So if risk takers can, if there's a 10-15 point drop, risk takers can buy, keeping yesterday's low as stop loss. And if that sustains, we may head towards the level of 24,500 today itself. for next few days. This upside can lead towards level of 24,670, 670. One can review at those levels. So these are the levels that one should be watching out for Nifty and Bank Nifty. That will be all from my side. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.